folks. Joining me now, Aquinas Wealth Advisors President, CEO Chris McMahon. Chris, you know, there are parts of the market that are obviously giddy, no doubt about that. How much does that worry you? And how much should investors be worried, right? All these new things are coming back on. These SPACs are out there and everything else. You know, on one hand, I worry maybe about investors, but I also worry that Wall Street may take advantage of investors.
Yeah, isn't that the truth? It's so interesting because we hear people say we've been climbing that wall of worry all year, haven't we?
Yeah.
Internationally, things are horrible. Look at Ukraine. Look at the Middle East. It's unbelievable. Things are overvalued. But here, as we sit today, we're saying to ourselves, interest rates are going to get cut, Charles. That's an enormous thing, right? All this infrastructure spending is going to take hold. We think there's going to be an incredible boom. So we're a little bit more positive. We think it's an optimistic
time. Yeah, you're positive, right? Because you talk about this wall of worry, but also what powers us over this wall of worry? You say the infrastructure bill, that whole story is broadening out. Yeah. U.S.-based investments. Now, part of this is as a consequence of the big, beautiful bill.
Absolutely. I mean, think about that. Think about the opportunity zones being expanded to rural America. That in of itself is huge. The advanced deduction is unbelievable. The increased deductibility, 100% deductibility. People are going to buy tractors. People are going to buy airplanes. This is going to light the economy on fire. We think the next 12 months are going to be a boom time.
How many rate hikes how many rate cuts rather do you see between now and the end of the year?
We see three, and we see a full point at least. Now, we saw mortgage rates creeping into that kind of 6.5%, 6% range. It seems like that 6% range is where people can breathe. The real estate numbers weren't great. They were okay for multifamily. They weren't great, but we think it goes below 6, or we get mortgage rates to 6, we're going to see builders
I've actually seen now even sellers. A year ago, sellers, like only a handful said they would sell above 6. Now a whole lot more say under 6, right at 6. Now a lot more sellers will also probably show up too. Let's talk about the composition of the rally. Because you are excited about the second half going into 2026 because of the other 493.
Exactly.
Today, now, it's changed a little bit. This is about an hour ago. Tech, communication services down. As a consequence, the market is down. But we can see 9 here. 9 of 11 sectors are higher. And you think that we are now building momentum where these other 9 sectors can win the day?
It's got to be time, right? There's got to be a broadening out at some point. Morgan Stanley said yesterday, didn't they say that people are undervalued in all the Mag 7?
Right.
We think that's okay. It's okay to have a little Mag 7 in there. But for goodness sakes, those other 493 stocks are going to do unbelievable things.
But how? I mean, just because of consequence they're due? I mean, are they going to have earnings?
I think they're a little bit due, and I think earnings have been great, right? 80% outperforming in the second quarter. It's wonderful. I think you're right on. But I also think this whole idea of things being cheaper, companies can borrow money. We're going to see all this kind of M&A picking back up again. This is all happening at the same time.
Let's look at one interesting thing. You talked about healthcare, and maybe there's a little shaky in there, but within there you mentioned United Health. United Health has been huge since we learned that not only did Warren Buffett has loaded up on it, but all of those super duper gigantic investors. Some are making a comparison to United Health, Palantir. One company has $1.7 billion free cash flow, the other $25 billion. One company's market cap is $400 billion, the other $280. Just looking at that alone suggests that maybe UNH is significantly undervalued.
I think it's finally time to believe they're undervalued. I think it's got another 10 to 15% to go this year. And I think finally it's time to think of it as a value stock and to buy that thing.
Let's talk about a couple others in life. Sure. I know there's a company, is it Bridge Bio?
Bridge Bio, yeah.
Let's talk about this because I'm not familiar with this. I love the chart, though. I'll tell you that right now.
It's a great chart. Yeah. 40% up this year already. And actually, the guys at Duquesne Capital just got out of it. I think they made their profits for the year. But the reality is that this cardiomyopathy is a 5 times bigger market than originally expected. That's a big deal. We think these orphan drug companies that are going after these obscure issues are going to make all the money. That's why we like it so much. So these orphan drug companies, we think they're uniquely positioned, and we think that I think Pfizer's their second closest competition.
Could this be a takeover candidate as well?
Absolutely. That's how they're going to be an exit. Yeah. We think it's an $80 to $100 stock. We do.
Real quick, we got 2 other stocks I want to talk about here. Primo Brands, I'm not familiar with at all. Palo Alto, I'll start with that though. Earnings, they beat everywhere, guided higher. Is this now the preeminent cybersecurity play?
Yeah, they just made that big acquisition, as you saw, and people were worried about it. Well, the earnings took that all away.
They overpaid. It doesn't matter. It really doesn't matter at this point.
Doesn't matter. It's exactly right. So Palo Alto, we think they're the best kids on the block. This whole identity governance thing is a huge thing, and we think they're number 1 in the space.
All right, Primo Brands.
Nobody's buying beer anymore. Nobody's buying liquor. The young people aren't drinking. They're unwilling to pay $120 for a bottle of wine. They're super willing to pay $30 for a couple bottles of Saratoga water. Health and fitness water, Charles. That's what we're talking about today. So we think we're excited about what they're going to do. They're going to pick up big market share.
This is a water play.
Yes, sir. We think it's big.
Absolutely love it. Great stuff, Chris.
Thanks, Charles.
Talk again real soon.